You're watching a replay from the 49th Annual Gabelli Automotive Symposium, recorded live via Zoom in Las Vegas. This presentation is shared as originally broadcast. Minor technical interruptions may be present due to the live recording format. Thank you for tuning in.
Always makes for a more pleasant Q&A session when you can introduce the CEO of a company whose stock is up 80% in the year. More since November. And the person that's probably most responsible for that transformation. We have Dana Incorporated, Maumee-based manufacturer of driveline systems and power conveyance and sealing and thermal systems for a variety of end markets. Significant financial engineering in the 2.7 and 2.4 net billion sale of their off-highway business to Allison Transmission, which is set to close very shortly. The company has just about 130 million shares, trades around $21, about a 2.8 billion equity cap. Pro forma for this transaction, the company will essentially be net debt neutral, about $100 million of net debt or so. So about a 2.8 billion total enterprise value. I first met Bruce McDonald, who is the company's chairman and CEO, when he was chief financial officer at Johnson Controls back when I started in 2008. So we're delighted to have Bruce here. Also joining him, as well as Craig Barber, who has presented at this conference as well for really the better part of the last 18 years as well. Yeah. So thanks for being here, Bruce and Craig, and we'll get right into some Q&A.
Thanks for having us.
So, Bruce, while I would say Dana has been here, I believe, in some form since the beginning, maybe take just a few minutes for those that may not be as familiar with the company in the audience to just speak about the company, and then we'll go there.
Sure. So we're right now we're about 10 billion, just a little bit over that in terms of sales. We have four. We used to have, I'll sort of talk to how it was. We had four business segments. We had a light vehicle driveline business, so axles, drive shafts, things like that. That's our biggest division, primarily North American centric and exposed on sort of very few platforms. So it'd be things like Super Duty, Jeep, Wrangler, Gladiator, Bronco. So there's probably 6 or 7 programs make up the bulk of that segment. Then we have a commercial vehicle segment that makes similar products for class 6 and above trucks. Then we had a power technology segment that does sort of sealing and gaskets and thermal management. That business we've sort of folded into light vehicle last year as part of our cost saving initiative. And then last, we have an off-highway axle business, a driveline business, and that's the business that you were referring to that we sold to Allison. So post that will be three segments down to 2, and combine the aftermarket operations of both of the segments under commercial vehicle as well.
Thank you very much. Can you go back to the decision to sell off-highway? I think it was a surprise at the time for the marketplace, which maybe didn't understand the business as you did, because it was the highest margin business that you had, and as it turns out, you had great plans for the rest of the organization.
Right. Well, I think what ended up, it's kind of a couple-year discussion at the board level. And by the way, I've been on the board at Dana for about 11 years, and I've just stepped in as CEO and chairman the last, say, year, almost a year ago now. So at the board level, back in sort of 24 type timeframe, we saw a pretty substantial opportunity for us in terms of electrification. Think about our products. They sell for X, an e-axle full, $4 or $5 billion of business opportunity, but we couldn't afford to fund that. So that really teed up discussion around our portfolio. And when we looked at our off-highway business and worked with a few financial advisors, that was a good business, very accretive, highest margin business, mid-teens. And but it wasn't getting reflected in our stock price. And so it really came down to very straightforward some of the parts analysis, like we were trading at sort of 4 or 5 times. We were, our beta was high because of our debt leverage being in a cyclical part of the industry, especially on the CV side, and our comps on the off-highway business were in the 7 or 8 times. So we took the decision that we were going to sell that business. We had a lot of interest in it. We announced a year ago that we were going to go through a formal sale process. Took a bit of time because of tariff situation, but we got it done, and it's, we're in the red zone right now, just waiting for the final regulatory approval and some, IT separation stuff. So we anticipate that business will sell. It'll close here in this quarter, but net, the decision when we announced we're going to sell that, our stock reacted very favorably, and when we announced the deal, it reacted favorably as well. So I think just their commitment to shareholder.
Unique about this process is that simultaneously and in parallel, you've effectively announced a track to significantly increase the profitability of the core Dana light vehicle and commercial vehicle businesses. Maybe, talk about that opportunity.
Yeah. So obviously, if we looked at our company, if we sell our highest profitability, segment, what's the business going to look like on a go-forward basis? And it really gave us the opportunity to relook at everything that we do, especially with me coming in with a fresh set of eyes. You could say an insider, but an outsider. And we basically set ourselves an objective, like how much do we have to cut our cost base to get our margins back to double digit? And so the guidance that we sort of set when we announced our transformation a year ago was we said we're going to get our margins in 2026 into the 10 to 10.5% range, which was, I'd say, skeptically received at the time.
Yep.
And that comes off of a year where we're going to have about 10% margins with our on-highway business this year. So a couple of things. One is we were able to pivot fairly significantly on the EV side. I mean, the market, had substantially changed in terms of I talked about having 4 to 5 billion of opportunity. That drastically reduced itself. So we were able to really dial back the amount of investment they were putting on the EV side. We became much more of a simpler, North American centric organization. Like I said, we took out a business segment, we streamlined the management team, and I just, with the management team, went through a line by line process. And we originally started off with a $200 million target that we announced, even though we were internally working on 300. And after having been there at Dana for a couple months, we formally upped that target to 300, and we've, on a sequential quarterly basis, made fantastic improvement and been able to realize it quicker than we expected. So of that $300 million target, which is now 310, we anticipate delivering 235 million of that in this fiscal year, of which we delivered 75 million in our most recent quarter. So team's done a great job, and we're excited about the opportunities that we have going forward here.
Yeah, I think it's remarkable as well, particularly given some of the difficulties in the commercial vehicle market, which has been traditionally a higher margin business for you. Just spend some time in that market right now. Obviously, a very weak time period for it, and orders continue to point to another weak year in 2026.
Yeah, I think I saw something where there's a forecast next year about the market this year being around 225 for North American CV, and maybe getting down to the 200 type level for next year. I mean, if you look at the Q3 run rate that we're at, it's probably in the 50,000 for the quarter, and we see ongoing this year with people with some of our customers taking either shifts out. I wouldn't see any signs of any green shoots. There is an emissions changeover coming in 2027, and typically there's been a pre-buy associated with those in the past. And again, we're not planning on that for next year. I mean, hopefully it'll happen, but we're not going into 2026 planning on that. So the guidance that we've provided is with the CV being, I'd say.
Would say the orders certainly aren't showing any sort of green shoots or any sort of pre-buy.
No.
I want to go back to EV development. Obviously, this was a big part of the Dana story when you had your investor day a few years back. Maybe talk about where Dana is now from an EV development standpoint, and not necessarily relative to where it was, but where can you drive value for your customer base, and where do you see any potential growth in that market?
Yeah, so just maybe just stepping back, we have about 700 million of EV business right now. Where we aren't seeing it is if you sort of went back, what do we see a couple of years ago and what do we see now? The North American SUV market electrification is pretty stalled. So there was talks about electric version of kind of everything and volumes that were very high. If you look on the CV side, I would say you've got a number of OEs that have gone out of business. You've got program volumes that are down. I was just looking at one yesterday with the European OE where the total program volume that we're looking at right now is 87% lower than it was when we were awarded it. So it's required us to kind of do a fundamental shift in our strategy, and this is something that we talked about when I came into the business. Is look, we are not going to invest our shareholders' money for these increasingly risky long tail cash flows. And so we basically said, look, if it's an existing customer, we have ICE exposure, like Ford Super Duty be a good example.
Right.
Yeah, we're prepared to be their partner of choice from a technology point of view, because if the EV volumes don't materialize, let's say on the Super Duty, we'll have the natural hedge on the ICE volume being higher on the other side. But if we're not in that situation, then the business. And with us taking that approach, we had some customers that walked away from us, and we also were fairly successful in getting both capital and engineering recoveries.
I think you bring up an excellent point about this natural hedge for Dana being traditionally an ICE supplier for driveline systems in the truck and SUV market, where you're also continuing to win business. So maybe talk about some of the business wins, the larger business wins that you've seen in the program and the content wins that you can continue to develop.
Yeah, on a go forward side, I mean, we have our business is performing very well right now, and we're continuing to gain share. If you look at our customers, they're all kind of announcing larger SUV, either capacity expansions or incremental products. And so that's a healthy area of growth for us. On the CV side, we've spent the last couple of years, and this I don't think is very well appreciated in the market, but we spent the last few years restructuring our North American operations. We have a brand new greenfield operation in Mexico that produces USMCA compliant product. And I believe we have a cost leadership position versus our competitors, and we are being rewarded with incremental share. And then, on a go forward basis, there's just a number of things that both on the growth side, Brian, but also on our opportunities to improve our margins in the future, where we've really milked our business at the expense of some of the investments are made in EV that we'll pivot back to. And some examples about our aftermarket business. It's a $850 million business at very accretive margins, and we virtually put no investment in that business. So that's something that's we've been focusing on. And just as an example, if you look at the North American gasket part of that business,
right,
we're not in that market today. or we weren't. We have about 30% share in Europe, 35% share. So that's a focus for us. We've had some key wins this year to get into that space.
I would imagine, thinking about your manufacturing operations, that nearshoring or friendshoring is a net benefit to you. Just give footprint. Talk about maybe and how you may be able to generate some substantial revenues from that.
Yeah, so it's probably less about that for us because the platforms that I kind of referred to are pretty much all manufactured here in the
Right.
US. So I think I kind of look at it more as a volume uplift because maybe they have a cost benefit versus some of their Mexican made comparable vehicles. So we're definitely seeing that. I guess just I know tariffs is probably the topic of the day. Here's how I kind of look at it. It was very simple, not simple, but it was very evident that we were not going to get slammed from a tariff point of view. If this would have been a 5% tariff, we would have had our customers saying that's not our problem. You guys are going to have to eat that. But once it became 30, 40, 50, you pick the number. Nobody in the supply industry, like forget about us, none of the suppliers could afford to eat it. So then the question really became, hey, are these guys going to pass the cost on to the end consumer or not? And, in the short term, they did not. So therefore, there was no volume deterioration. And if you now look at some of the subsidies, some of these tariff rebate or the credit on average selling price, and I think very importantly, the dialing back of the penalties on fleet mileage regulations, I think net, I see very little risk that average selling price are going to have to go up in a meaningful way. And that I think is really good for volume. And secondly, as it relates to our exposure on the large end of that market, it's fueled capacity expansion and new program introductions. And that's where I see our growth coming from.
That's a terrific overview as far as how it relates to Dana in particular. On the tariff side, I would imagine commercial vehicles, it's the same, particularly given your exposure to your largest customer in the commercial vehicle space being more of a North US manufacturer anyway.
Yes. Yeah. And again, they put the similar sort of rebate type program in for vehicles assembled in the US. And our biggest customer is much more heavily exposed to US assembly than its two competitors.
Taking the view of Dana post off-highway sale, effectively very little in the way of net debt. You all have talked about a turn of leverage. I guess my question goes to, does Dana become outward looking from an M&A perspective, maybe elsewhere where we're not thinking?
Yeah, I think the way we're thinking about it right now, Brian, is we know we're a show me story, I guess I would say right now. We have to rebuild investor credibility. And so, big focus of mine is being very clear in terms of what our goal, what we're going to do. And then, consistently, delivering on our commitments. And I think, we've put together 4 good quarters here. As it relates to cash and capital allocation, we've said that we're going to take $600 million of the $2.4 billion net proceeds that we're going to get buy back stock. We've essentially done that. As of yesterday, we've bought back just over 30 million shares. So our current share count's about 115 now, not 130. So
yep. Well, this was the book was printed in June, but you're 100%. So the top sheet has something totally different.
Yeah, and I like I said on our earnings call, look, our stock is trading well below its intrinsic value. We've given consistent guidance to where we're going to be in 2026. The street's well below that. I would also say there's almost no imagination in terms of looking beyond 2026 in terms of what the potential is. and I would like to spend a few minutes on that because I think,
Please.
we've got an underappreciated growth story for 26 and beyond. So we're gonna, as we said on our last earnings call, we're gonna set up a call here in January and go through our backlog in terms of what exactly is in there. We've got a number of growth opportunities coming at us, I would say. And, we talked about some of the LV ones, but we've got some niche products in the high performance transmission. We've got some, niches that we've just historically not put the resources in. And I'll give you a couple good examples, that being something like our defense business, where we've never really had a sales force attacking that business. And there's been quite a big change in terms of strategy on troop redeployment and things like that in the battlefield. Our aftermarket wins we can talk to, and power sports, these off-road vehicles. This is not really like on the utility side of the market, but on the performance and higher horsepower, these things are getting up into 200-300 horsepower now. And if you look at the technology that's on the drive lane, one, it's almost all purchased in China, and the technology is very, very almost like steering type technology on the drive shafts and things like that. So there's several other things like that, not billion-dollar opportunities, but I would say $200-300 million growth opportunities for us that we're gonna start to resource and chase. Then on the margin side, a lot of questions around like, how sustainable it is, and is there anything left you can do and stuff like that. And I guess I kind of think about it like the $300 million that we've committed to was stuff that we could action quickly and have in our run rate by January 1st, 2026. There's all kinds of opportunities for us that are with either have to make some systems investments or things like that. So I would say from a margin enhancement point of view, we are in the fourth inning in terms of the opportunity that's available to us. We've probably got another $100 million of cost that we can take out through systems investments and things like that would add to, let's say, the 300. If I look at our manufacturing operations, and I know in some of your questions that you sent in advance, you asked me about, bringing my JCI experience, what did I see? But if I look at our manufacturing footprint, we do have too many plants. There's significant opportunity to rationalize that. The level of factory automation that we have, and I'm not talking about humanoid robots, I'm talking about basic automation, loading and unloading machines. We are way behind the automotive standard. So I'd say we just in automation alone, we've got a $70 or $80 million opportunity that we can get after. And then our aftermarket business and our product profitability is exceedingly poor. We don't have good information. And as we've brought in some help to look at our product line profitability, we have a lot of complexity in our business and things that we don't make, that we lose money on. And so we are working our way through that where we'll either exit that or reprice it. So anyway, I'm getting pretty excited and talking quickly here, but there is an awful lot of future opportunity. And so when I look at the growth that we have, the opportunity we have for expansion, I think our multiples, I think we can get re-rated when our balance sheet's better. We think our stock is trading at just a huge discount to where it ought to be. And so our cash flow right now, because quite honestly, we buy 2 get 1 free.
Yeah, no, I agree with you. Any questions out there, please raise your hand. I want to just ask a question about the defense business. How would that grow? Would a Spicer axle be DoD driven from a production standpoint? Is it the manufacturer?
I'll let the expert answer this one.
Okay.
So, hey, Brian. Yeah, it certainly could be, and it certainly is today. So if you think AM General for years, the Hummer, was the original military Hummer. That was driven on a Dana.
Oh,
sorry about that.
Yeah.
A little better. Sure, sure. So the question was around the military aspect and would a Dana axle be applicable? It certainly would be, and it is today from the Hummer. So the original AM General Hummer used the Dana Spicer axle. And if you think about what and Bruce alluded to it, where the military is going for a lot of off-the-shelf applications, this is a perfect application for vehicular technology. General Motors makes a lot of technology, so you'll see more and more of that out there.
Got
So,
it.
a lot of opportunities. We still also today in the commercial vehicle side, we do a lot of logistics vehicles where we provide our central tire inflation systems, which allow you to change the inflation of the tire to go from the street to sand to dirt to whatever. So that's been out there for a long time. So a lot of growth opportunities there.
Harry?
Yeah, just was curious how you're thinking about the free cash flow conversion, especially as we look out to 2026.
Yeah, so for next year, we've said we're going to be in the 4% type cash flow, 4% of sales. You'll basically, if you sort of do the math, from where we are now, and again, I know there's a bunch of confusion around discontinued operations accounting and whatnot, but what I'd say is with 10.5% margins, we'll probably be in the 4-ish%. Capital will trend up next year as we put some money into the automation and footprinting that I talked about. And then what's the real big driver though is interest and taxes go down by a couple $100 million year over year. Interest obviously because of our leverage going down, and then our our off-highway business pays a disproportionate amount of our cash taxes. Our Dana overall, we have significant tax losses in the U.S. that mean we'll really pay very little here in the U.S. for many, many years to come. Well, I think if we said 10.5 minus, let's say 4% for capital, that leaves you at 6.5. We still have some interest and taxes, just not none. So I'd say there's room for improvement, but it's not going to be 6 or 7, next year anyway.
Bruce, upon the announcement of the exploration of strategic alternatives for off-highway, you took on the CEO role on an interim basis.
Mm-hmm.
What I have heard today is someone who is very excited about this company. Has your thought changed as far as how long you want to be in the role? Because one, you're doing a terrific job, and two, it seems like there's a lot in front of you.
Yeah. So a couple things on that. So in coming in, and I originally sort of signed up for about a year. That's what I told my wife anyway. And then we wanted to make sure we had the cost reduction behind us. And then thirdly is put together a growth plan and for beyond 2026. And so that's what I've been working on. I'd say with the board, we didn't get started on the succession planning for longer than we thought, because the off-highway sale, quite honestly, we thought we were going to have internally, we were hoping we could announce something back in like February, March. So that it ended up taking us heavily involved. So I'm not walking away from anything when I phase out here. But it's we've kind of put together a structure where I do expect that my successor will start here towards the middle of next year, and I'll phase out gradually. But I'm going to be very hands-on going forward.
It sounds like whomever has the opportunity to take over is going to get to do so really running, because of the foundation that's been put in place.
Yeah. And we'll start to be more transparent in terms of some longer term financial metrics and some quantification on some of those things that I talked about. You know, we are giving some thought to having an analyst day here, maybe after we get through the year end, but so more to come on that.
Terrific. Well, if there are no other questions from our partners in the audience, I want to thank you very much for being here. It's really been great, and I really appreciate you taking the long
Well,
flight
thank you,
out.
Brian. You know, in all my years at JCI, I never made it down to your conference, so I guess I owed you one.
We're always trying.
Yeah. I think some of our guys did.
Yep. Thank you very
All
much.
right, thank you.
Brian Sponheimer is a portfolio manager and Edward Nakamura is a research analyst at Gabelli Funds. This webcast is a recording from the 49th Annual Automotive Symposium, which occurred on November 3rd and November 4th, 2025, in Las Vegas, Nevada. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of September 30th, 2025, affiliates of GAMCO Investors Incorporated beneficially own 24.44% of Stratec, 10.09% of Rush Enterprises Class B and less than 1% of Class A, 6.44% of Standard Motor Products, 4.39% of Monroe, 3.96% of Dana, 1.68% of AutoNation, 1.17% of Advance Auto Parts and less than 1% of all companies mentioned. The analysts' views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800 Gabelli 800 422 3554 914 921 5100 fax 914 921 5118 info@gabelli.com